All right, good morning, everybody. So as I mentioned yesterday in the morning briefing, there have been a little bit of changes done in the Discord. Everybody hates change, so I'm sure at first it'll be a little uncomfortable and there'll be some learning curves, maybe a few bumps in the road, but we'll get it all figured out. In the end, I think it's better, consolidates the chat. It helps people who get lost and confused within the Discord not have so many channels within that Discord. And I mean, people really struggle with technology, get lost on the way to Google. Let me get this Bloomberg quieted down and we'll be good to go. All right. So again, it's still a Fed week. Today is job numbers, the JOLTS numbers, to be more specific. These kind of job numbers are more about take this job and shove it. All right. When you have a job and you're kind of worried that you couldn't get another one if you lost the one that you have, then you hold on to the one that you have with both hands, right? You go above and beyond, you do a little bit extra, and you really strive to make sure that you keep that job. If, on the other hand, you feel like there's a lot of jobs out there and you could easily go find another one, then you tend to believe that the grass is greener on the other side and start looking for other places. And you're less willing to tolerate the BS, right? You're willing to cut ties and walk away from that job and go find another one. So that kind of behavior is something that they monitor in the marketplace as a sign of, what's the current outlook out there? Are people hiring like crazy and thus providing a very strong, robust job market, or are businesses contracting and uh, there's a what do they call it, a job desert out there? That's the jolts. But we also have factory orders and we have additional auctions at 11 o'clock. So those additional auctions are always worth keeping track of. You never know when it's going to be one of those days where the market really responds to them or not. Right now, we're looking at a daily chart of the ES. It's always important to take a look at the higher time frame. I know a lot of day traders who never go out to these higher time frames. Well, I'm a day trader. I don't need to go out there. You don't need to, but you may be surprised at what you find once in a while. There's not always something to find. A lot of times you're going to go out there and there's just nothing there. But at least you looked, right? Because if there was something there and you didn't look, then you're not going to see it. The blue line that you see, the little dashed blue line, that is a 10 period moving average. And the reason it looks so weird is when I go into the lower time frames, when I'm no longer on a daily chart, it still shows up, which means when I get down into something like a 15-minute, it still shows up. That's that daily 10 period moving average. And I'm constantly asking the question, how far away from the 10 are we? And are we moving farther away from that 10 or are we moving back towards the 10? Think of the 10 as the fulcrum point or the middle of price action, right? And so when we get below it, we expect we're going to come back towards it. And when we get above it, we expect we're going to come back towards it. What I look for is, have we gone too far away from it? Because when price really starts to pick up speed, it will outrun that moving average. While we're talking about a daily chart, we always want to ask the question, where's the weekly expected move? Now, this is a very busy chart. There's a lot of stuff going on. I get it, right? These lower ones, that's the 10-week perspective that we were just talking about, and the 10-day perspective. How far away from those moving averages are we? But what we want to focus on is, where's the box? And as busy as this chart is, if we get rid of a lot of that other clutter, we just need to zoom in and focus on this right here. That's the expected move for the week. The gray line in the middle, that's where we closed on Friday. As I speak right this moment, we are right where we were Friday. It's like yesterday never happened at all. And just like I talked about yesterday, you can expect that we're going to do a whole lot of running around without actually going anywhere until the Fed gives us that guidance. Like a hamster on a wheel, we did a lot of work. We ran and ran and ran and ran, and we're right back where we started. Could it break down and get nasty, or could we break to the upside and really rip? Yes, we absolutely could. We never want to say that price can't do something, but it's very unlikely that we're going to have some real change in market sentiment between now and the Fed announcement, right? Because everybody's waiting to see what the Fed is going to do. Money market managers, money fund managers, they're not going to go out and allocate or make decisions on just an absolute overwhelming amount of capital 2 days before a decision may make them unwind all of those decisions, right? They're going to wait. That doesn't mean we can't trade by any means necessary. We're going to trade. So game it out for today. What do we have? Well, first let's just back up. Just back up a little bit more. This is year to date. It's an intraday chart, but it's still a year to date chart. Come on. You can do it. There it goes. So the start of the year is all the way back here. Basically from this last high and the line that runs across. So 4,800. We can count that as the high of the box. 4,100 was the low of the box until yesterday. And so our range is set. That's a nice 700-point range. Now, we peaked outside of the box yesterday, but the way IBD describes double bottoms is price should go lower than the previous bottom. It's a good thing. We want it to do that. So there's a little bit of expectation that the double bottom is set. I don't agree with that. Then there's the expectation that, well, yesterday was the low and we're coming out of the lows and we're done and the catalyst is over. I don't agree with that. Those can be true. It could unfold that way. I don't necessarily believe it because throughout history, when we set a low, we set it with a massive gap down and then a rally back up, something that looks very similar to a day like this. And there will be an absolutely amazing amount of volume. And we had that signal and it failed. And if you check my post in the Bullish Bears after hours chat, I think this kind of sums it up real nice. We're in the last good quarter, guys. Anything past this, and the expectation is that the markets are going to start reporting earnings that are not quite too favorable, right? How long can customers at these businesses continue to pay high prices, especially when you can't get goods and services, right? I went shopping for nightstands in my bedroom, 2 weeks ago. The prices were insane. And they said, well, we can't get it until at least 6 to 9 months. So what? They want me to overpay like crazy and they don't have it. And I'm going to have to wait 6 to 9 months. I didn't give them my business. I didn't buy what I was looking for. Right. I've got an old truck. I wanted to swap it out for a less old truck. Prices were nuts. I didn't do it. I kept it. That's just getting worse, right? It's getting worse. It's getting worse. Businesses are going to start reporting that their sales are dropping, that their costs are worse, that they're starting to lay people off, that it's going to have that ripple effect, right? So the market's starting to price in the idea that this is the last good quarter that we're going to get. until we come out of all of this mess. But all of that's for another day. For today, what do we got? The S&P sideways within its own Globex range. So we've got our Globex high and our Globex low. We are sitting inside of that micro range. I really don't think it's going to stick and hold through that. That's way too tight. The expectation is for today's range to be either inside of yesterday's price action, and there's no either to it. I think that's it. If we're going to call range today, this would be the range that we would call. All right, so that would be scenario one. That's our range from yesterday's lowest point to this morning's Globex highest point, and that's a wrap on that. So scenario one, we stay range bound. Scenario two would be that we challenge the 10 period moving average. That would be that blue line right there. So from that basis, we'd have to get there. Well, Lucian has a knack of blowing up the system. You guys on YouTube, did that help with the screen getting bigger? Seen someone yesterday say that the screen was small, and I seen a setting that would make it bigger. I don't know if that helped out or not. All right. Anyways, so an upside breakout would first have to get through our own Globex high. Beyond that, we'll look at Friday's levels. There was a midday pause around Thursday's low. That's really close to our own Globex high, but it's still worth marking. Beyond that, we had the open of Thursday, which ties in with the Globex low of Friday, and then we're at that 10. There could be something in the middle of these two worth noting. Maybe the Globex low of Thursday between Wednesday and Thursday. So we'll put a line on that. But we still want to validate those lines, right? We don't want to just draw a line and say, oh, look, it matches a previous pivot point. We want to go in and check the volume profile and see if there's anything there that can validate that line. For the moment, though, from our current location with an ADR of 2.1, start pressing it to the upside. How far down are we? 0.25%. So we just take that quarter off and we call the ADR 2%. We start making the move up. What's a 2% move give us to the upside? Right around that Thursday open. Okay, not bad. That's a good place to start. That would be 42.30 for an upside move. That would still put us underneath that 10 period moving average. So that'd be one side, one direction to go. What else we got from there? We got our downside move. For our downside move, we'd first have to break through our own Globex low. We would then want to focus on yesterday's Globex low. And then focus on yesterday's low. The pivot point that we're at right now really seems to be yesterday's open, right? And I mentioned it yesterday. That's one of the most overlooked pivot points, and yet it still has so much value, right? Yesterday's open. So we got our lines. Want to go in and validate those levels. There is a point of control at 42.12. That's really close to 42.11, the COG line that we talk about frequently. I would definitely want to have a line there. Should we come into 42.11, there is an expectation that we will have some reaction in the market. So I'm going to steal one of those lines and move it up there. And there is a cluster of volume between 41.39 and 41.20. Kind of run that across. That's what we're tangled up in, resting on, working through. There is a shallow area between 41.75 and 41.50. We did rally up into that 41.75 and rejected there, but we didn't hit any kind of volume profile or anything like that. Looking at it on a 5-day, 5-minute chart, yesterday's point of control is an untouched point of control. So if we were to make a move to the downside, we definitely want to know where that is. Very likely to be a reaction if we come into contact with that point of control. All right, for the NASDAQ, the Globex range is a little bit wider, but we've got the exact same scenario. If you put the linear regression line on there from our peak, just drag it across, you can see how we've got a very uniform swing high and swing low, but it is beginning to expand a little bit. Remember, it's supposed to be uniform. So if we get a 0.1% move in one direction, we expect the same 0.1% move in the other direction. Our expectation in this is not any different than our expectation within the ES. It's going to be driven by everything that's happening today. The NASDAQ's not going to move on its own, right? It's going to be a part of the overall situation. We've been highly correlated in the last few days. So, like all of the stocks in the basket making the same move, the same direction. So, move to the upside, we'd have to violate the Globex high and press towards that 10. The NASDAQ is actually close enough to the 10 that it could break through that and make it through to the other side. We've got an ADR of 3.2, and we're only down 0.2. So plenty of room. That 10 period moving average is 1.8% away from us. Now, that's a good thing and a bad thing from a couple of different perspectives. That sell off that we had Friday and then going sideways yesterday gave the 10 time to catch up. So we're not very far away from the 10. If we were to start breaking to the downside, we're not overextended. We're not oversold, as much as I don't like the phrase. There's plenty of room that we could go to the downside, and this would not be considered beyond that 10% move that we talk about all the time, or that 10% moving average. So from the perspective of how close we are to the 10, should the NASDAQ really start to break down, it could fall a long, long ways and not be overextended or oversold. For that upside move, um, generally speaking, we expect a market to respond when it gets to its 10, at least a first touch play at the very least, and it's well within our ADR range. So a break to the upside through our own Globex high would challenge that 10, and then should we get above it, we would focus on some sort of Busby, right? The Busby being something like we get through it and we pull back and we rest on it, validating that old resistance as a new support level. A downside move, on the other hand, would first need us to break our own Globex low and then begin challenging yesterday's levels, starting with the Globex high, the open, the Globex low, and yesterday's low. Now, these levels are uh, 13, 12.85, 12.75, and 12.7. There is a pretty wide gap in there that we didn't hit. But if we look back, there is a Globex level worth marking right around 12.9. And that covers just about everything on the downside. Those would be pivot minors and institutional pivot points where we'd expect price to respond and react all the way down. Should we break below 12.7? Bring it out on a daily time frame. You can see that there is a weekly expected move pivot point at 12.446. We would need to go all the way down there before we would even be considered having moved too far on the week. It's worth noting also when we were looking at the ES is basically where it was Friday, right? We did all that running around yesterday, and by the end of the day, coming into this morning, we're basically where we closed Friday. In the NASDAQ, it's not that way. We're still sitting well above Friday's close. So, from one perspective, you could say the NASDAQ maintained that move or moved more and just hasn't given back as much as the ES did. Either way, we're not at the close here, and we were at the close of Friday's level in the ES. If we're looking for parity within the two indexes, then we would expect the NASDAQ to sell off back to 12.89 at the very least, just to get back in line with its sister. We do have a really nice base built here on the NASDAQ, and the controlling candle would be that sell off from 426, right? So that's the range, that's the shadow that we've been living inside of since that day. And even at this point, we're still inside of it. So we got a beautiful trend to the downside with the 10 period moving average. We've now, even if you count that lower wick, which I don't because it wasn't a close lower, it just dipped lower, then our last low was that 426. And we've had nothing but higher closes since then. That gives us a base, it gives us a bottom that we've been focused on. And right now we've got lower highs and higher lows, other than that little wick out. We've got a lot of compression building up here. If we think about it from that point of view, then we've just got this Massive amount of compression in the last few days, all staying inside of that 13.6 to 12.8 range, winding up more and more and more and more energy. So on to the Fed day, which will be tomorrow, there's an expectation of an exaggerated move, right? Because we're just winding up all of that energy. So we do have a untouched point of control underneath the market. Should we break to the downside in the NASDAQ, we're going to be looking at 12,870, 72, right around in there. That's an untouched point of control. There's very likely going to be a reaction in the market at that level. And we have another one to the upside from Friday. The one from Friday puts us at 13,340, basically. All right, so we got the dollar dropping really hard and fast here. Keep your eye on this. We want to know the impact that it's going to bring. At the moment, it's not bringing too much. You can see this exaggerated move here in the dollar, and we're not seeing an exaggerated move anywhere else. We are starting to see some flow, right? We're starting to get a little bit of push in the stocks, and even the bonds is enjoying a little bit of fire off of this, but it's not an inverse relation, right? We have two really big candles, and within the last three candles, which is the last 45 minutes, we had an exaggerated move in the dollar. We're not seeing those exaggerated moves in these other markets, but we are seeing some risk on appetite, right? A little bit of move to the upside. Definitely want to keep our eye on this dollar. This is the thing that really drives the markets, right? The dollar, the bond, and the stocks, the relationship between these three. We can see even gold is enjoying a little bit of that bump to the upside. Uh, The volume in Bitcoin seems a little light this morning. It's spotty, it's choppy, it's kind of all over the place. There's missing information there. And yet it's also enjoying that little bump, right? So keep your eye on the dollar. This thing needs to calm down. It needs to find some support and kind of settle in a little bit. We don't want to see it getting extreme. It's worth noting when you come out to the daily chart on the dollar that we set that high the other day, 104 almost, 103.94. And since then, we've just been compressing. We've been getting this bull pennant, lower highs, higher lows, wedging up more and more and more and more. And now we're getting that break to the downside. You could look at it as well and say, well, we got a little overextended. We got, we leaned a little too far over those skis and we got too far away from the 10 period moving average, a little overbought. When we get overbought like that, the expectation is that price is going to pull back or that it's going to quit running in the direction that it was going and wait for the market 10 period to get caught up with it, one or the other, or both, right? That it can sell off some and then maintain the range and let that 10 get caught back up with it. Either way, we're headed back towards the 10. The expectation on the dollar would be that we find some support at 102.85 ish, right around in there. And if that fails, then the 10 period moving average is the target. Keep your eye on the dollar. We really don't want to see this thing get out of control. If we can maintain our range inside of, say, Sunday night to yesterday, if we can maintain this range, I think everything is going to be all right. We start breaking down below Friday's Globex or Friday's low, it could get a little nasty out there. So the bonds are trying to build a little bit of a base. They are maintaining it with a higher low. Now we need today to close before we can confirm this is a higher low pivot. But at the moment, that's what we got, right? So we want to see the bonds kind of maintain inside of yesterday's range, maybe a little move to the upside, but we have to watch that 10-period moving average. Should we get outside of yesterday's price, which is a big if, then the 10-period at 140.26 is likely to give us some trouble. And the 10-year looks more squishy, and it gave us a lower low. So we're still sinking. We're still settling lower here. And, there's still more to come, I'm sure. This is not even remotely close to being the bottom. All right. So after the moves that we had yesterday, that rally into the close kind of threw a lot of things off. I was looking at some markets this morning that had a lot of doji candles or had uh, a reasonably decent hammer candle. What we want to see in a lot of the markets this morning is that we're going to be gapped up, maybe a red to green setup. BP is up because of earnings, made it back above that 10. Expect some sort of resistance around that 31. And kind of keep in mind, this thing has been range bound, but it has been trending to the upside. If you put on something like the linear regression, just take it back to the first of the year, the slope is clear, and so are the swings. It's a very nice, clean example of those swings that we talk about. Devon Energy is another one that's up this morning, also with earnings. Oddly enough, Citigroup is up a little bit. At least one of the cruise lines, Carnival, so a little bit of travel. So some of the names that are down are some of the ones that were doing really good. Were doing really good yesterday. Take a look at something like Riot. It had a little bit of a rough patch, but while everything was selling off yesterday, Riot was doing really good. Came into the close strong. Is down this morning. It's that same capital rotation over and over again, right? Things that were down yesterday are good today. Things that uh, were good yesterday are down today. Looking at some of the worst on that list. Now, Thinkorswim just doesn't really do a good job with pre-market change percent. That indicator would kind of get us pointed in the right direction, but we're better off just using something like TrendSpider or TradingView. Either one of those do a really good job looking at pre-market. So let's look at the sectors. What sectors do we have right now that are doing good? Which ones are not doing so good? Cloud computing, uh, regional banks, silver, the devil's metal, emerging markets, natural gas, gold. And then from that, it starts to get flat. Come out the other side of that. We start looking at things that are down like USO, real estate, building materials, industrials, marijuana. Marijuana was doing really good yesterday. And I mentioned this looked like it would be a really good short. I didn't get filled in what I was trying to trade, but uh, for the moment, anyways, we had a significant gap down. So those marijuana names, when we start breaking it out, kind of a mixed bag. No, these legacy sectors kind of miss some nuance, right? So we want to go in and look a little bit deeper, say semiconductors. So for the most part, those are down. AMD's up a little bit, and MU. Of course, we got earnings. The rest are kind of flat to negative. TSM and the semiconductor ETF down nearly 0.75%. But when we get past that, start looking at crypto for an example. A couple are really beat down, like SOS down more than 6%. NVIDIA, 0.25%. So the EV market this morning, a couple of our legacy names, GM and Ford, are negligible, slightly up, slightly down. We get into the extremes with things like XPEV up 2.8 or Ride down nearly 1%. And the reason I'm pointing these out is we're trying to find some idea, right? We've got a whole 600 companies that have weekly options, and we've got to narrow that down. So we start putting them in the funnel, right? What kind of trader do we want to be? Are we going to run contrarian, or are we going to play the move that we see? How far are they up? How far are they down? Are we expecting a reversal off of those levels or a continuation from those levels, right? And we keep narrowing down the list so that as we come into the open, we're left with a watch list of, say, 2 or 3 names, maybe 4 names, right? That's a lot of narrowing down from 600 names to 3 or 4 names. Now, it really has to come down to what kind of trader you are, or at least what kind of trades you're looking for in the morning. If you're going to focus on things that have already made an exaggerated move and perhaps flip them back the other direction, or if you're looking for names with a peer group that's already had a big move, but that name itself has not yet made the move, right? Kind of finding an opportunity in something that has not yet caught up with its peers. We're still going to expect that sideways market. So anything that we do have running around, we're going to expect it to revert back to the mean. There's always a particular name or a particular sector that gets the attention on the day, right? So even on a day like this, with no expectation that the market is going to make any significant moves, and by the market I mean S&P and NASDAQ, we're not expecting the market to really give us anything definitive until the Fed. But that still leaves the possibility open that an individual sector or an individual name could make amazing moves on the day. If we look at the companies that have weekly options, which is these 2 watch lists at the bottom, you can see that there are a lot of names that are up this morning, even just a slight amount, which is kind of what I like. I don't want to go after them if they've already made a 6% move, unless I'm going to flip them and take them the other direction. And we've had a lot of those kind of markets lately, right? Where we're up a lot in the pre-market, we open and go a little bit higher, and then it rolls over and dumps the rest of the day. So we focus on it from that point of view. Those big names, or those names that are up big, become an opportunity. Considering the fact that I'm already day done, I get that day done in the futures. Anything that I get out of the equities is just a little bit extra, a little bonus on this side. Careful, you do got the numbers, guys. One last time, there's been a change in the Discord, as if you hadn't noticed yet, right? So we've combined everything into, not everything, we put futures and large caps together. This is going to reduce the amount of confusion from new people who don't understand what Discord is and gets lost going from channel to channel. Hopefully, it will eliminate some of that dead noise. It seems like a lot of days I'm the only one talking in this entire Discord. And maybe if we combine channels a little bit, it will become a little more active. I think you futures traders will realize that in the large caps, we're talking about a lot of the same things you are. What's the S&P doing? What's the NASDAQ doing? Right? And the same thing for you stock traders in the large caps. I think if you haven't been watching futures, you're missing out on a chance to pick up some skills that will help you trade stocks better. Right? So this isn't a bad thing. It's a good thing. Zoom has its own chat, so I don't see why this should interfere with whoever happens to be streaming, and we'll still have the same streams that we've been having, as far as I know. There may be a few more name changes. I don't think Lucian's quite happy with the names that I gave these new channels, but other than that, their current status, I guess is a good way to say it, is the new norm. So everybody, have a good day. I'll see you all tomorrow.